Hi everyone, welcome back to the final part of my series on how to buy a house. If you want to know the details of all the steps that get you to the closing, please check out the other videos. I'll put the links in the description below. If you've been watching the series and enjoy it, please hit that subscribe button. With that out of the way, let's talk about the final topic, which is closing. Okay, first of all, congratulations, you did it. You got through the rigorous process of finding your home, putting in an offer, and negotiating any issues that you found during the inspection. Now you're at the final stretch, which is closing. And honestly, closing is a little bit anticlimactic after everything you've gone through, but to make sure you get to that point, you need to have all your I's dotted and your T's crossed. If you're taking out a loan, the lender is going to want to get an appraisal done on the house, and if that appraisal comes back significantly lower than your offer, then the lender may not agree to fully fund your house, and you need to be prepared to have cash to cover that difference. Let's say that the lender requires you to put 10% down. That means that they're funding 90% of the deal. If the appraisal comes back significantly lower than what you offered, then the lender bases that 90% number off of the appraisal value of the house, not the offer, because they don't want to be in a situation where if you default on the loan, they're left holding the bag for a house where they loaned you significantly more than the house is actually worth. So in that case, you're going to have to fund the difference between 90% of the offer and 90% of the appraisal. And hopefully, if you did a good job learning the market and you didn't lose your mind during the offer stage, then this shouldn't happen to you. Other than that case, you're going to want to have additional money to cover the closing costs. And closing costs can include things like the lender fee, credit report, appraisal costs, title fees, and other random costs. Other things can include HOA fees, homeowner's insurance for the first year, flood insurance if required, and prepaid interest for the first month. So make sure that you get all the numbers from your lender and the title company so you have everything ready beforehand. If at all possible, a day before closing, you should go to the property and look around just to make sure that no damage was done during the seller's move out and basically that the place is in the same shape it was as the last time you saw it. You really don't want to have a surprise the first day you move into your house, either finding out that there's a bunch of damage or trash or things that shouldn't be there, or God forbid, even squatters have moved into your place before you got the chance to come in. The title company should really make you aware of these things, but there may be certain tax exemptions that you're eligible for example, a homestead exemption that you can file once you take ownership of the house, and these significantly reduce your property taxes. So make sure that you file those and get them in before the tax man comes knocking on your door, because they really can save you a lot of money over the long term. At the closing itself, you're going to spend basically a lot of time signing a ton of documents. But once you've gotten all those documents signed, you've gotten your key, and you've taken your picture with the realtor, go celebrate. You did it. I really hope that this series of videos helped you in that process. And if you got any value out of it, please give it a like and consider subscribing to my channel. Thank you for watching. See you all next time.